We're talking about a new dawn for cross-border payments in Africa. We all know the difficulty of moving money within and across Africa still remains a major obstacle for businesses, both local and international. There's the issue of trapped cash, which is a challenge. Some multinationals across the continent face obstacles in repatriating funds due to currency restrictions or exchange controls, which can hinder operations and lead to exits from the continent. The number of intra-African migrants compared to those leaving for traditional destinations highlights the need for seamless cross-border payment solutions to support this growing trend. But the ability to directly use local currencies for cross-border transactions on the continent forces businesses to rely on the US dollar, adding unnecessary complexity and cost. This is primarily due to the lack of interoperability between African currencies. Institutions like Afreximbank are pioneering innovation through its Pan-African payment settlement system, PAPS, to make things easier, as is the African Continental Free Trade Area, while other private sector operators are also bringing new and innovative solutions to this challenge across the continent. Today on the show, I'm joined by Anthony Oduu, virtually the co-founder and chief technology officer at Verto. Verto is aiming to tackle some of these challenges by providing SMEs with solutions that address the lack of liquidity, high transaction fees, and long settlement times associated with cross-border payments. Thanks for joining me on the show today, Anthony. Great to have you.
Thanks for having me.
So I guess the first question I have for you is really SMEs who make up the bulk, 90% of businesses doing business across borders in Africa are bearing the brunt of this challenge. Can you just help us analyze and explain the extent of this challenge and how it's impacting business growth?
Yeah, thank you very much. Yes, when it comes to SME, we all know that SME, they are the biggest employer when it comes in, especially in Africa and in most countries around the world. And when it comes to Africa, the biggest challenge for them is actually getting access to something that I will call very simple. So getting access to a very simple way of making payments. A lot of SMEs are always buying and selling something. And in the case of Africa in general, a lot of SMEs are importing goods from countries like China, India, even in the US and so on. Now, when it comes to payment, one of the biggest challenges for SMEs is actually getting access to foreign currencies like US dollars, pounds, euros, in order to pay their suppliers overseas. And some of those reasons is down to local, what I call local nuances and local jurisdictional or local regulations and so on. And in order to get SMEs to actually be able to make payments easily, you have to have companies like Verto or other banks that actually come into play to allow this to make it easier for them to make those payments. Now, it's not easy to make payment when it comes to Africa because some of those currencies are very liquid. Some of them are not accessible. Some of them are not even accepted in any other country apart from the country that they originate from. So these are the bigger issues that SMEs are facing. And on top of that, we have the local, Yeah,
no, thank you very much for that explanation. I think it's clear that SMEs really face the greatest challenge. So, at the top of my show, I was talking about this phenomenon where people who are trading or doing business with each other between African countries, sometimes their payments take long. So if I'm selling to somebody in Cameroon who's buying and I make payment via my bank, it takes a few days. And I see on part of the sort of receipt, if you like, that the payment has to be settled in a foreign country with a foreign bank before my buyer receives, or my seller actually receives, the money in their country in Africa, which is only just an hour's flight away from Nigeria. So can you tell me how specifically you're helping businesses overcome this challenge through your solutions?
Yeah, that's a very good question. Before I answer the question, I want to highlight the real problem here. The real problem is not just the fact that you have to it's not the fact that the money is taking longer to take. It's actually the fact that between two countries, let's say between Nigeria and Kenya, for example, there's massive diversity when it comes to regulation. There's no balance in financial system across Africa in general. What that means is that you cannot just send your naira to Kenya and the other person can receive Kenyan shilling. And I believe this is something that organization of PAPS is coming into play to actually organize a simple way of connecting two countries and settlement happening behind the scene. What Verto is doing is we're trying to remove that pain point. There's no reason for you to have to send Nigerian naira, have to come back to US dollars, then go back to Kenyan shilling. That is not the way it should work. So what we have built is a simple way for businesses to come online, exchange the currency, local currency, and make payments in real time, and have not to worry about how long it takes. And the other person that you're paying, which is the beneficiary in this scenario, they can get that payment in real time, if not in less than 24 hours, rather than taking 48, 2 weeks, and so on.
Okay, so help me walk through this, Anthony. So do you have a platform where I, as a Nigerian supplier, or can go online and make that payment? I'm making that payment in Naira, right? Help me walk through the steps so that our viewers can understand the solution.
Yeah, the step is very simple. You come online, we have a platform where you go online, you have to register your company. So at today, we only service businesses across Africa. When you come online, we need somebody. So this is what we call KYC, KYB. We need to know who you are, what your business does, and so on. And once you're onboarded and you're fully compliant, you can literally just go online and make a payment to a suppliers in Kenya or a suppliers in South Africa. How that works is that you need a way to fund your Naira account, which is a local bank account that we offer you. This is a bank account that provided by local banks that everyone knows in the country. Now, once you fund the account, in real time, you get a price, this is the price for you to convert your Nigerian Naira to your Kenyan shilling or to your South African rand. And in real time, as soon as you convert, that price is locked in. And as part of that process, you then add your beneficiary details. This is basically the beneficiary. It could be your suppliers, it could be you paying payroll, or you paying for school fees and so on. Once you add the details onto the platform, the payment happens in real time. Now, behind the scene, there's a lot of things going on. We want to make sure that the person you're paying is obviously not a dodgy person. So we have to run AML, PEP, sanction on those beneficiaries. We want to make sure you're not paying terrorists, or you're not trying to finance terrorists, and so on. And most of this stuff is to protect you as a customer. And the way it works, like I said, is very simple. Within 2 minutes of you literally logging your details online, putting your currency on the platform, you can make that payment in real time. And your suppliers in Kenya, in this scenario, they will be getting their local currency as well. So what we're trying to do is to remove the need for you to try and find a foreign currency like US dollars before you can pay someone in Kenya that actually doesn't want US dollars. They want Kenyan shilling as well. And that's what the platform provides. Today, we have about 49 currencies. 12 of those are actually African currency. So we're talking about currency like Nigerian Naira, Kenyan shilling, South African rand, soft surf in the Francophones, Uganda shilling, and so on. And what we're trying to do is to literally find a way to, simplify payments across Africa.
Yeah.
So as a business,
thank you for that. Thank you for that. You make it sound very easy, but I want to understand the transaction costs, because for something that obviously facilitates a much faster payment process, there are clearly costs involved. That's the first question. And then the second one is, what is the difference between this solution and the types of solutions that are being preferred by the Africa Export-Import Bank through its Pan-African payment settlement system? I'd love to hear your thoughts.
Yes, the cost for when you use Virtual is actually very, very cheap. With most SME, we don't charge for payments. We don't charge you for anything. What we do charge for is that conversion of currency from one currency to the other currency. Why are we able to make this a lot cheaper? The reason is because we have businesses globally. So we're not trying to buy currency from you and then spend hours or days trying to literally facilitate maybe another buyer of your currency, which could be at any price. What we do is, like, on both sides of the market, we always have businesses in Kenya, in South Africa, in Nigeria that actually need other currency. And what we do is we just do what we call netting off. What that means is that there's a local currency in place already. So when it comes to payments, we are not moving your Nigerian Naira out of the country, go online, convert it to dollars, and then send to another country. Your Naira stays in the country, the Kenyan shilling stays in the country. What that means is that when it comes to payments, the payment is localized. It means that we are using the local banking rail to make that payment. So therefore, it's a lot cheaper when you use the platform like Virtual compared to maybe other providers.
Okay, the question around how this differs from solutions like the Pan-African payment settlement system.
That's a good question. I would say what we do is very similar to what they're trying to build. So they're trying to build the same solution, but using the government side, which is like allowing the settlement to happen behind the scene between two governments, like between Nigerian Central Bank and maybe Central Bank of Kenya.
Right.
And what that means is, like, unlike Veto doing it with individuals or businesses, the country is doing with each other, and they're plugging with that on that settlement rail.
Yeah, thank you very much, Anthony. So there's a big question, a bit of the elephant in the room, if you like, that the world of online payments and virtual payments is fraught with all sorts of unscrupulous characters, scrupulous deals, concerns around fraud, cybersecurity, payments getting hung in cyberspace. You know, how can you reassure people who are using these platforms that your system is watertight from a governance and regulatory perspective?
Yeah, that's a very good question. What I would suggest to anyone using those platforms is, number one, you want to make sure the platform you are using is regulated. A simple Google search will tell you that. You want to make sure that this platform in the past hasn't gotten any adverse media against them. They don't have anything against publicly or on Trustpilot that other users have actually come up and talk about them in terms of like whether they've done something good or bad. What we do to try and protect our customer is actually have what we call transaction monitoring solution in place. So this is us plugged into government database globally. This is us plugged into some of those databases that are capturing bad actors. So for example, in the UK, there's a database called CIFAS, which is used by banks. And on this database, you have a list of all bad actors in the past. What that means is that when a new bad actor comes in and trying to use our platform, before they even go through KYC, KYB process, we already stop them at the point of that transaction. So it stops bad actors from coming in. And what we do then is, like, if we find the bad actors within our own system, we report back to that database. And a lot of startups do that, a lot of banks do that. And what we're trying to do collectively is to kind of remove or reduce the noise when it comes to a number of people that are, as you said, very, very bad when it comes to the interaction online, the way they want to make other people feel, especially in terms of fraud and so on.
Okay, Anthony, so you talked about being regulated. So is VetoFX a fintech? And if so, within which regulatory regime or hat or geography does it fall under, since you provide sort of cross-border solutions to customers?
Yeah, Veto is regulated. Because we provide global solution, we have to be regulated in a few countries. So we are regulated in places like Nigeria, in Kenya, in the UK, which is our home country. We are regulated by the FCA. We have what we call EMI license, which is similar to an extent, a banking license without having to do banking. In other countries that we are regulated, like South Africa as well, what that means is that we want to make sure that before we go into any country, we are compliant with the local jurisdictional regulation. And most of that is around the movement of funds, the conversion of currencies, ensuring there's KYC, KYB in place when you're onboarding the customers, ensuring there's transaction monitoring in place, basically overall being compliant and protecting our customers.
And how big do you think this market could be of cross-border payments? You know, if we were to quantify it in terms of value, what are we looking at here? That's the first question in this round. And then secondly, just trying to understand the role of technology in actually helping you create some of these innovative products. What can we expect in the next stage of advancement in cross-border payments across Africa?
Yes, in terms of the market size, I believe the African cross-border payment market size is over $400 billion a year. And that's literally removing anything like a letter of credit, any normal banking cross-border payment. This is just on business transactions. That's over $400 billion in Africa alone. And that's it's only going to grow. When it comes to like the role of technology, wow, personally, I believe that's what we've seen in Africa over the last 20 years. Like African, for example, we leapfrogged every other continent when it comes to like digital adoption, when it comes to like using mobile technology, when it comes to even payments itself. I believe Africa is one of the first countries that actually implemented faster payments. Nigeria has had faster payments 10 years ago. And that's what you're not seeing in countries like UK, in Brazil, in India, and so on. So the role of technologies is yet to play a massive role when it comes to how money is going to move globally. And the people that are going to do that is going to be similar startup, fintech that are actually in the game to make the life of customers a lot easier.
And in terms of technology's role in this space, what do you see on the horizon?
I think a lot's going to happen when it comes to things like documentation and clearing between intra-Africa trade. We need to think about how, as a whole, the whole Africa needs to come together. They need to reduce the diversity in regulation. I think we can only use technology to do that. We need to think about how to have potentially one single currency, like the likes of the CBDC, because that will allow easy movement of money. Again, you need technology to do that. I know in Africa, for example, there's a lot of, I would say, positive and negative news when it comes to cryptocurrencies, which to an extent is valid argument when you look on both sides. But when you actually bring in the likes of stablecoin, which is what most governments in those countries are trying to actually implement, that for me is the role of technology, where you can actually have a digital currency that can be moved across different countries seamlessly without any interruption, issues, and so on.
Yeah, thank you very much. And, of course, there's all the controversies around cryptocurrency. But I have one last question for you. If you were in a position to make systematic changes to the ecosystem of cross-border payments today, from a regulatory or policy perspective, what would you do?
If I was to make massive change,
from a policy perspective, yes.
The first thing I would do is to allow stablecoin to play a major role.
Stablecoin, that's the cryptocurrency.
Yes, cryptocurrency, but more on the stable side in terms of like most stable coins are pair 1-on-1. For example, when you look at the stable coin like USDC, it's pair 1-on-1 to US dollar as an example, right? So what that means is when you have a stable coin that is digital, that is online, payment is going to be faster and cheaper for end client anyway. Also, it means that you don't have to worry about local regulations to an extent because this is meant to be a stable coin for Africa, not for one country. So the regulation, the compliance, everything around movement of money, everything around delays right now will be removed completely. So I would definitely, if I was an Africa, leaders right now, I would come together and come up with some stablecoin that we all can use as one currency. The other thing that I would do from a regulatory point of view is to actually sit together and come out with a few regulations that can be adopted across multiple countries. For someone like Virtual, one of the issues that we have to work in is actually how we can operate locally, because every country have different regulation. And to understand, some of them are not very clear. And if you can imagine which is our job to do that, struggling to make sure that we always compliant every day. Imagine what an SME have to go through to make sure that they're compliant with payment.
Yeah, I mean, those are two very big and ambitious policies. The first one around stable coin for use across Africa, given how African governments are sort of regulating crypto. That's a very bold one. And of course, the second one, harmonization of regulation. It's something that many organizations, the public and private sector, have been clamoring for years. But thank you so much for the awesome insights, Anthony Oduu, Chief Product Officer, Chief Technology Officer at VetoFX. Great to be talking with you about cross-border payments in Africa.